we're going to kind of continue, and this today is going to be not so much psychology oriented, but maybe a little bit more practical, something that you guys can go on the chart and start mapping out for yourself and kind of studying. So today we're going to talk about swing points, and in a swing point we have three candles. Okay, so we're kind of going to stick with that idea of simplifying things, and instead of looking at all of the candles, we're going to look at three specific candles, right? Um, we'll kind of touch on this in a bit, but just remember, has an element of PO3 or AMD, right? Same thing. So that one I haven't talked so much about. I mainly talked about it in I think the first stream we did. So we'll go over that as well. And then we can talk about candle 1, candle 2, candle 3, and how we use them. Okay, so if you guys missed the last one, when we were talking about swing points, like just so that everybody here has the same definition, right? We can use this little indicator. Again, I wouldn't recommend you become reliant on indicators. I think if you guys draw them out, it's going to be really beneficial because sometimes there's some sneaky ones, and unless you've really trained your eye, you will probably miss it. So just kind of use this indicator to cross-reference and make sure that the setting is 3 of 5 or 3 instead of the 5. Okay, so what's happening right now is the highest points and the lowest points in the market, the swing points in the market, are being mapped out. Okay, so like I said, let's get on the same definition. The reason that it's mapping this out is because candle 2, right? 1, 2, 3. Candle 2 is the highest point out of all three of these candles. So we would map that out as a swing high, right? And candle 2 is always going to have the swing high and swing low. And it's the same thing going lower, right? And if you notice, this one is actually both a swing high and a swing low. So we have candle 2 here. It's got a swing low and a swing high. Here's another, right? You can see that all of them have that same thing in common. I look left, I look right, this is the highest point, and so on, right? So today, when we're going to be talking about why the three candles are specifically important, we have to think of the power of three, which is an idea essentially that the market moves in a way that we have a form of accumulation, manipulation, and distribution. And you can think about, like, if we were to take this candle here and we were to zoom in and break it into pieces on a fractal level, right? Like going to our time frame alignments, going to the 4 hour and seeing what does this candle look like? Only this candle, which is a week's worth of time, right? What does it look like under the scope of a 4 hour, right? And you would see something like this. So this is essentially how candles are made, right? I have the open, the low, the high, and then the close is usually lower. So, and we can think about this in a lot of different ways. Like I said last time, this could be quarter one, this could be quarter two, quarter three, quarter four. This could be Monday, Tuesday, right? There's a lot of ways to think about power of three. And in this specific way, we're thinking about those three candles doing the exact same thing, even though it may not look like accumulation to us, right? So let's take this one for example. Candle 1 here and the power of 3 would be considered the accumulation, right? And what does candle 2 do? It manipulates above candle 1's high. And how do I know that it's manipulated? Is because we pushed through it, but we didn't close above it, right? And that's a little bit more advanced. We don't need to focus too much on that right now. But what we're going to do is we're going to take one of these examples. Let's use this one over here, right? So we're going to use this swing low as an example. In a way to kind of like visualize it better, if you guys want to practice with this, draw out just use like a rectangle, the rectangle tool, and draw out the different ranges for those three candles, right? And just make them different colors. And so now what we're going to do is we're going to go to that 4-hour and we're going to see what it looks like. Okay, and just remember, this is candle 1. We'll go ahead and label it so we don't lose our spot. Candle 1, accumulation. Candle 2, manipulation. Candle 3, distribution, which is what we want to be trading, right? We don't want to, you can trade the manipulation, but it's a lot more difficult than just trading that third candle, which again, something we're going to talk about. Candle 3 is the easiest to trade. So it's kind of where you want your focus to be. So let's go back. So now on a fractal level, right? Each one of these is 1 week, right? This is 1 week, this is 1 week. But now we're looking at it through the time frame alignment like we were talking about last time, right? We're using specific time frames to jump to. We're not just going weekly, daily. You know, there's people that have like 9-hour chart, 11-hour chart, like they're getting very complicated. But just using this is what I find to work very well. So when we're looking at these candles, we also have to remember that on the weekly, these are swing points, right? And our whole purpose, our whole job, like when we're talking about this system, our job is to learn to get on board as this third candle is forming. Like being able to anticipate that if I saw us manipulate below candle one's low, right? And then we start moving back up, that's at some point because that happens, I would start thinking, okay, maybe candle 3 is going to start moving up, right? And in this example, candle 3 actually just accumulates and it's candle 4 that eventually takes off, which that can happen sometimes, but either way, when you get caught in a consolidation, you shouldn't be losing too much. Like if you lose once or twice, like you're out. And I mean, if you catch this move after, you can be pretty confident that candle 4 will give the move if candle 3 didn't. So this is a good example just to visualize what's happening on that lower time frame when we're looking at swing points. Okay, because all in the entire market, like power of 3 is such a prevalent idea. It's in every single candle that you trade. If you know how the candles move, you know that they open, they make a little consolidation, make a low, a high, and then they close, right? So let's take a look at another example. We can look at this one where it has a really pronounced manipulation below candle one's low, right? So once again, candle 1 is going to be that accumulation. Candle 2 is a manipulation. Candle 3, usually the distribution. But we'll map out candle 4 just so we can actually see a distribution on one of these. One of the tricky things about accumulation is it can look very different on the different time frames. So it becomes really easy to get lost. So mapping these out like this should help a lot. We'll make the manipulation red. And yeah, that's candle 3 and 4. So that's the distribution. So when we look at these three candles and we can start to kind of understand what to expect after manipulations. Like in this case, if you traded the manipulation, you got a pretty decent move. Uh, but usually, candle three, candle four, those are going to be the safer plays, if you're really trying to make your win rate so that it's like it's higher, because they're different personalities. Some people don't mind the trade-off in the like risk to reward, because they can win more uh even though they lose more, which is kind of odd. But yeah, so going back to this, candle 3 is going to be the main thing that we want to focus on getting good at because it's the easiest, because the manipulation is done, and at this point we would have expectations that it would go higher because of how it closed, right? If you notice, they all have that same thing in common, where if we remove these for a second, we can see, right, that candle one's low is here. We manipulated, and we're using the word manipulate specifically because it came all the way back above and closed in here. If it just closes below, then I'm not gonna be using it the exact same way, right? So like here's another example real quick. We manipulate above candle one's high, and then we close back inside candle one's range. So when people talk about range trading, one of the easiest ways to do range trading is to treat candles themselves as a range. And if I just zoom out for a second, every move that you would want to catch on this chart originates from a swing point, right? This really huge move right here starts with a swing low, and it starts how we just talked about, right? We manipulate below candle one's low, close back above, look at candle 3, look at candle 4. And if you go back on the charts and you start looking at this and paying attention to what happens after swing points are formed and how you can get on board, you can get really good at trading without having to spend so much time learning. Because I know that that's really the biggest thing that people want to kind of maybe not speed run, but you know, it's a lot easier to want to go fast than slow, especially in this business, right? Where you can just make so much. So yeah, like if we look at a couple more examples, right? There's candle 1, candle 2, and as you can see also on some of these examples, candle 2 can be really nice to trade, but that's getting like a little bit more advanced of like when I would prefer to trade candle 2 over candle 3. But candle 3 is just like the easiest one to trade. So yeah, there's this other example, right? It's candle 1, candle 2, candle 3. And it's really important that you just remember that one cue that we're closing back inside of candle one's range, right? And since we're doing this on a weekly, right, the moves that we're going to get are going to be pretty substantial, right? We took the high here. Look at what happens, right? We took the high here. What happens? We get really, really nice moves from the weekly. So that's why it's one of my favorite time frames to kind of anchor on. I don't know who it was yesterday. It was maybe John talking about his time frame alignments. Weekly 4 hour 15-minute is one of the best. See, we take the low, have a nice W-shaped reversal, and look at the move that happens after. That's why I'll I'll reiterate it one more time. Your job, if you want to be good at day trading, is to get on board or learn what's going on here, what's going on at the place where everywhere you look, there's going to be a really nice move originating from it, right? From this high to this low, always starts with a swing. So, touching back to what we had talked about earlier about the framework, we're keeping everything simple, um, and we're reducing the amount of things that we want to focus on ultimately, right? Because it's already complicated enough to deal with all the psychology aspects, and the more components you have in your system, the more mental stress it's gonna end up being for you. Okay, so we're gonna kind of remove the indicator for a second, and I kind of want, you know, tell me guys that if I map a swing low or swing high wrong, like let's see, I just want to see if maybe somebody can, that they're familiar with the pattern already. So like this example right here, just you can even kind of just think to yourself, would this be correct swing high based on the definition I gave earlier? And the answer would be no, because if I look at this candle and I look right, this candle is lower. But if I look left, this candle is higher. So this can't be swing high. Swing high is candle 2, right? This one would be correct because if I look left and I look right, it's the highest point. Yeah, okay, nice. Haviz got it. You're trying to increase your chances using this series so you know what you're dealing with. Where can we find more info on Power of Three? So, like I said, I'll point you in the right direction, but I'm not gonna lie to you. The content is it's pretty dry. Um, it's not it's not easy to get through, but it's definitely worth it to really spend some time on this concept because it really is, you know, we can even kind of show some of the examples from yesterday, right? Where you can get a lot of attention or a lot of good connections, I'll say, if you can reliably see this in the markets and start calling it out, you know? You can't, it's not enough to just do, you gotta call it out too, which can feel intimidating at first, but you'll start to actually see it and get more confident. But here's another example of PO3, right? Accumulation, manipulation, distribution. Who was it that asked for the PO3? John, you could DM me. I'll link you a good video. What do you think the most reliable concept to make good and stable returns from Forex PO3 or SMC? Well, that's that's the thing. SMC, smart money concepts, would also have that inside of it. Now, like if you're gonna talk like change of structure and stuff like that, my opinion is that that's a little bit rebranded. Like market structure breaks and market structure shifts are pretty much that. Um, but smart money concepts are good, which I'm pretty sure are ICT concepts because I don't think SMC existed before ICT. But yeah, let's go back to the chart. So again, here's an example of power of three in play. And it happens over and over and over again. Right? This is like one of the best ways that I've like called shit on the timeline. I use this and I can see it and everything is taking place in a logical place, right? We can take this swing low to swing high, right? For those of you that know premium and discount, we hit this high time frame. We have this high time frame fair value gap, right? In discount, right? So we hit it. I'm already thinking, when I see an accumulation and a move lower in a bullish leg, that's how I'm already thinking. So when you get really good, you're also gonna start learning about where should I anticipate power of three relative to the chart, right? So here we have another one. Not a big manipulation, but it is still a manipulation above this high, right? Excuse me. All right, and then we have that distribution, right? So these are the moves that you guys want to catch, right? Like every single blue move that you see, like that's the move you want to catch, right? Now, sometimes the red one, like the other example, like back here, or actually it was this one, that's the one you would have wanted to catch, but it's such a pronounced wick, right? As opposed to like all the other ones. Let me just check if there's any questions. CT and SMC. My friend has recently learned and his technicals become very good, stable, and predictable. Yeah, and it's kind of hard learning from ICT because there's so much content and there's like so much concepts to know. But that's the thing. What I'm teaching you here is, like it's my own system put together from those concepts, and I've made it as simple as I possibly could make it. Because that's how I like to trade, I don't want mine to be super complicated. I like having just like a simple, effective strategy that I just wait patiently till I see what I want to see. Okay, so we'll look at some monthly examples. Right, so again, what would candle 1 be? Just like some questions to really make sure that you've got it. Candle 1 is either the accumulation, manipulation, or distribution. It's going to be the accumulation, right? And notice, right? 3 candles, PO3, right? AMD, they're all 3, right? And then the best one to trade is candle 3. So from the monthly, the time frame alignment that we're going to jump to is the daily, right? Like we talked about last time. And so we can see, right? Let's go ahead and just fix this real quick. Put an M on top. Whatever. All right. So candle 1, candle 2, candle 3. We manipulate above these highs. So kind of also take note of like manipulation has a purpose. Manipulation's purpose is to move us into key levels. When you think about a consolidation, an expansion, and a retracement, the retracement is a manipulation, right? There's the accumulation, and then you get your distribution. So just, take note of that. And as you can see, this candle 3 is pretty straightforward for, let's see how many days that is. This is why I like starting on the higher time frames, because look at how long we just keep moving lower. That's 20 days. I don't even need to count it. If you counted all of the black candles and the white candles, aka the bullish and the bearish candles, there's going to be significantly more bearish candles inside of this candle 3, right? And these are the kind of moves that we want to isolate and just trade, right? We want to kind of wait for it. The difference between a really good trader and a just modest trader is the modest one is going to be a little bit more chasey with things, maybe break a rule or two. But the professional trader, he's going to wait till conditions are exactly as his rules of engagement states, no exceptions whatsoever. Thank you, I appreciate that. Yes, you're explaining very simple and Jim, the way cleanest simple chart analysis, the better win ratio I've seen. Yeah, I think so too. A lot of the people that I see that trade well, that they're not going crazy. I mean, I've seen some that like I said, they've got the like seizure charts or whatever, but yeah. Why did I choose these particular candles? Because we're using the monthly swing point, right? So these three candles are the ones that are mapped out. And I'm mapping out the range of these candles. Um, Earlier, I think you answered the question correct. I mapped out something like this, and I told you, would that be correct? Would this be a correct swing high? And you said, no, it wouldn't. And that's because you know, right, that this should be the swing high. Candle 2 is the highest, and I look left and I look right. Um, so we're focusing on candle 3 because we're conceptualizing this swing point is accumulation, manipulation, distribution. Does does that make sense? Or is there like a part of that? So you took this swing point and you marked it as manipulation. Yeah, swing point as in I took candle 2 is a manipulation. So you can literally think of candle 1 is accumulation, right? Candle 2 is a manipulation. And in most cases, uh, candle 3 will be the expansion or distribution, which distribution is just a fancy way of saying, accumulation is little movement, manipulation is false movement, and expansion or distribution is explosive movement. So we want to get in when it's explosive, right? Which sometimes it's candle 4 that is the distribution, but I usually like to trade both even. But yeah, so hopefully that makes sense. Okay, cool. Yeah, and if you guys have any questions, ask them. Because this concept, like, I mean, I chose it for a reason. Like, it's my all-time favorite because, I mean, just look, this bull run, I've been a part of a lot of bull runs, and I fucked up a lot of them. Uh, but this one, I mean, I really nailed it just by using these concepts, like, look at swing point. Then we had a period of consolidation, even though that's a decent move to catch, honestly. Um, can look from here, right? Swing point. Look at these moves. Especially like even though most of what I'll be teaching is more applicable to day trading, like if you guys got money for like spot, you can make a bag catching moves like this, right? Candle 1, accumulation. Candle 2, manipulates. Candle 3, expands. Candle 4, expands. Candle 5, expands. Like, if you can set yourself up in months that like for the next at least 1 or 2 months, we're gonna go up, like, trading becomes a lot more simpler, right? Even this last really big move down came from the same thing. Accumulation, manipulation. Look at that candle 3. Massive. Yeah, I can do my best. Um, well, yeah, and that'll probably be good just to summarize a little bit just to make sure everyone's on the same page. Because it's a decent amount of information and it's simple, and we're also trying to repeat, you know, get some repetition in. So, I guess as an overview, right? What we've been talking about so far are swing points. So, let's just kind of go through the different W's of like what are swing points, right? They're a 3 candle stick pattern. Um, how do we use them? By focusing on trading candle 3 because it's the it's the distribution candle, but I want to use like a different word. Mm, we'll say the explosive candle. Why do we use them? Capturing a candle 3 from a higher time frame can significantly increase our probabilities by trading with the high time frame trend. Okay, and so like we'll use this so far, and we'll just, do you know what a swing point is? Like, were you here for that part? Yeah, it is recorded actually. Okay, cool. I'll answer your question in a second, Mir. Let's get let's get Kage a little bit caught up, and also maybe if anyone missed anything. Okay, so back to the chart. Um, so if you already know what a swing point looks like, what I'm telling you now is, okay, you know that. So as an extra layer, let's start to think about if swing points are made up of 3 candles, and we know that if we go and look into the charts, that every single pronounced move that we would want to potentially be interested in um, is gonna come from a swing point. And if we can get one of those from a higher time frame, then our bias for trading is going to be a lot easier to manage because it's happening on a high time frame scale. So we have a lot of time to be in that trend, you know. So so the 3 candles are significant and they tie into power of 3, right? Or accumulation, manipulation, distribution. Are you familiar with PO3? No? Okay. So the market likes to move in this kind of way where we have an accumulation, a manipulation, and a distribution, right? Manipulation, or I'll say it again, accumulation is a low movement, manipulation is false movement, distribution is explosive movement. So we really want to focus on distribution, right? And power of 3 can kind of like show itself in many ways. You know, this could be Monday, this could be Tuesday, Wednesday, Thursday, Friday, right? It could be quarter 1 of the year, quarter 2, quarter 3, quarter 4, right? So it could, and now I'm telling you that these candles, right, it can also apply here. Candle 1, we can label as the accumulation. Candle 2 is the manipulation. Candle 3 is the distribution, right? In a candle, right? This would be like a candle. We have the open, right? Where a candle starts, which is usually the accumulation or the Asian range, right? Then we have a manipulation to create the low of the candle. This is usually happening in London, right? And then we get the distribution in New York and the pullback and redistribution, like Mir was talking about. But we're not even gonna get into that. I'll answer the question right now, but we're not gonna get into it because that's a lot more advanced. Um, so then the candle closes up here, right? So accumulation, manipulation, distribution, and then for this like small pullback that usually every candle has, like as you can see in this bullish candle, it went all the way up here, but it retraced and closed here. this bearish candle went all the way down here, but then it retraced and closed back up here. The retracement, usually people just say like X, you know, so you'll see some people put like AMD X, and X is kind of like the quote unquote reset, but I don't use X. I just accumulation distribution, and yeah, I just expect the close to pull back a little bit. So if we can kind of wrap our head around this, if you have any questions, ask them, or if something's not clear, let me know. But if we can wrap our head around this, then we can start to think of candle one, accumulation, candle two, manipulation, candle three, distribution. Now, to kind of reiterate what I was saying, let's map out what candle three looked like. All right, and you tell me if this is a candle or a move that you would like to catch. Because I assume everybody here knows that you can make money betting the market's going down. But this is the one you'd want to catch, right? You don't want to catch candle one. Candle two, I mean, that's a good move. So we're not opposed to trading candle two. It's just candle three. I mean, look at it. Like it's hard to lose, you know, and if you get on board, which it gives many opportunities to do so, if you can get on board on this move, you get a really nice chunk, right? And you're operating in something that's high probability. And look, this is happening for a month, for 30 days, right? So, any questions so far? It was good to see you, Avis. Yeah, take care, bro, and good luck with your paper. All right, cool. So now if you guys have like we'll do like a little like market review and kind of what I've been thinking or what ideas I've been just kind of thinking about on the markets right now. And if you guys want to see anything, any coins, any assets, so you could understand the direction of the market from the manipulation candle, right? Yeah. Yeah, and that's what makes trading candle 3 easier because if I can see what candle 2 did, it's going to make it a lot easier. So like let's kind of like look at an example, right? You could trade candle 2, but let's kind of like look at it before it's even happens, right? Obviously, at this point, candle 1 just finished. For you to know that candle 2 is going to look how it does, like, is impossible, right? So candle 2 is forming, goes up, it takes a swing high, and it closes back inside candle 1's range. Bro, when is this shit gonna close? Oh, that's why. Okay. Oh, I guess I can't change it. Weird. All right. So candle 2 closes back inside candle 1's range, right? So we have a wick. What would the opposite of that look like? Where we close above, right? So after that candle's printed, I'm going to start looking at this candle, right? And if we want to get a little bit more advanced, I would map out the open of candle 3, right? And I would go on the daily and I would tell myself anything above the opening of candle 3, I want to look to go short for, right? So pretty much what I'm saying is anything above here, I see that is a premium price to sell at or go. And for us, we want to short in premium, right? Because shorting is selling, right? And if price is in a premium, we want to be selling in that premium as opposed to selling in what we would call a discount. right? You want to buy in a discount, not sell, right? So anything above here, I would be looking to go short, right? And as you can see, it was very little that it offered to us in terms of, you know, that was this was our move. So like I said, anything in premium, that's what you want to be focused on. So yeah, if you can understand, okay, candle 2 is formed, you'll have a way higher probability of trading what candle 3 is going to do, right? Just like literally look at every single monthly swing point. You see candle 2 form, right? And then you see it close back inside candle 1, and then look at candle 3, right? Candle 1, 2, closes back inside. Look at 3, look at 4, look at 5. Yeah, if you want it to be high probability, it does have to close back inside candle 1's range, for sure. All right, cool. So we'll kind of look at Bitcoin, as I assume that's what most people want to look at. Now, it doesn't necessarily always have to happen like that, right? Like, let's find an example, or maybe it didn't happen. Here's one here. We didn't get that one here, right? We still have a swing low, but candle 2 did not close back inside candle 1, right? So it's not to say that it's always going to be that way, but as you can see, if you want to get high probability, usually it is. That's a really good question, though. All right, so right now on Bitcoin, I'll kind of like teach this as like a kind of like a bonus. It's a really cool concept. It's one of the only ones that I know that has one, it just involves one candle. Anytime you see a candle, and this, don't apply this concept to like low liquidity assets. There's a lot of my concepts that you could, but this one, no, it just doesn't work. But whenever you see a candle with a flat bottom or a flat top, which they're kind of hard to find because um like there's one here. They don't happen very often, and it's called the devil's mark. And almost always, not, or I won't say almost always, a lot of the time, they tend to get filled. Uh, as in we come back and put in a deeper low, which is what I also think is likely to happen. I see us in this monthly bearish fair value gap. Also that weekly one that we're talking about, if we want to refine it down a little bit. We're in it right now. So I want to see like what's gonna happen here moving into this next week. But if we can close above that, then I'm gonna see it as okay. Let's map out the premium and discount. We have this discount for value gap, right? Move it across. And to answer your question from earlier, Mir, uh, what was it? It was about, let me check actually. The reaccumulation and redistribution. So usually when I looking at that, I'm looking at stuff like this, right? If you know market maker models, you will know that on the moves up or when you get, or I mean, it can be on the moves down too, depending if you're trading a sell or buy model. That's where I'm usually using it, not so much in PO3. And yeah, we can apply some PO3 to the chart right now. Okay. So there's a bearish fair value gap. We're keying off a bullish one right now. The reason that I'm not bullish yet is because like I'm bullish overall, don't get me wrong. But in terms of like very specifically positioning myself for like day trades and stuff like that, um, I want to kind of wait and see what happens in here because of on the 4 hour we start kind of like rejecting and curling down. There's like a lot of built up lows here and here that I'm not sure if they need to get cleaned out or not. Yeah, there's a lot. Whenever you guys see like relative equal highs or lows, they almost always get taken out as well. Like you look at these relative equal highs, taken out right there. So there's a lot of relative equal lows and stuff. So I would like to see what happens here first. I do have some spot because overall, right? Like, I mean, you don't even have to make it too complicated. You know, we have a low or we have a high, we have a low, a higher high, a higher low, right? High, higher low. So overall, I'm still bullish, but I would like to prefer to see something like this where we sweep, right? Sweep, because we didn't sweep here. So in terms of adding some power of 3 to this, right? We can see some accumulation here, which that will probably be one of the monthly swing points. We could, you know, if we want to get a little bit more technical, we can condense it down to these 3 candles, right? I'll show you this version and I'll show you like if we were just eyeballing it. Okay, so there would be the accumulation, the manipulation, the distribution, right? And for me, being on the weekly, I would just like, just eyeballing it. PO3 we have to think about like as a way to anticipate, right? Because I mean that's pretty much what we're doing here. We're building our anticipatory skills and we're trying to get good at being able to know when things are going to happen before they happen. That's why like when you learn to do this, I mean the feeling really is unmatched and for me at least, it never gets old. Like I always feel very like excited when, you know, whatever it was that I was anticipating really plays out. And this also gives you a way for you guys to start anticipating. You don't have to go straight into trading. You could literally just what's it called? Like you could just be showing yourself like, hey, for the past 3 months, 6 months, whatever, I've been able to like once this accumulation was forming and we're moving down into this fair value gap, I already had like a really good idea that this is probably just accumulation, manipulation, distribution, right? You do that multiple times, you're gonna get really confident, and then maybe you can trade. You know, and it's kind of better that way, you know, make proof, not promises. You don't know if you can make money in the markets, so yeah. But yeah, so that would be like my idea for the power of 3 on Bitcoin right now, and I think maybe there's an example on ETH, but I don't know, the ETH chart looks kind of wonky. Yeah, so like one of the tricky things about accumulation is that it can be in form of like something like this. Whoa, why did it do that? Okay, okay. It can kind of be like this. It can be sideways accumulation. It's not always going to just be like a perfect consolidation, like very tight. When you see it, it's nice when they're like that. Sometimes you get a little bit more messy accumulation manipulation, distribution. Because remember, right, that the manipulation is the retracement. But yeah, I can make it even a little bit tighter. But yeah, so it's kind of same thing for ETH. You know, we pulled back pretty hard into a nice key level, and we're getting a decent reaction off of it. But you see, we didn't sweep any of this either, so it just makes me a bit skeptical. And then we can also go over Sol as well. What if we want to execute on the 5 minute? Oh, my bad. I think you asked that earlier and I missed it. If you wanted to trade on the 5 minute, then you could go daily to 1 hour to the 5 minute. Oops. That's what I would recommend if you wanted to trade the 5 minute. What time frames would we take for the top-down analysis using Power of 3? There's that one, and there's this one. What was it? Weekly, 4 hour, and then 15 minute. I'm not even gonna give like the spot ones unless like you want them, which is like really long-term trades. But yeah, anything else you guys want to look at before we hop off, or any questions? Let me know. So we did get it on Sol, right? We got the sweep, right? This could have been a good trade that was taken, right? But it didn't give us the candle 1, 2, and 3. But the sweep is there, so you know. But yeah, I think that I want to see what Sol does here. How much more days we have? 3 days? 4 days? I want to see what happens in here. That's why like I'm not doing anything. I'm not buying, I'm not selling. I'm just chilling. That's something that will probably have to be covered tomorrow, because like when you start talking about the criteria, like then now that's like us diving into candle 3 as opposed to like we're taking an overview of everything right now, all the candles. Yeah, let's look at near and Zec. Damn. Fall from grace. See the monthly. Mm. I mean, like, I don't think that it looks convincing that it's gonna go back up. Maybe into this fair value gap it could push into, which I mean that's a pretty good move, honestly. Yeah, I mean 10%. You have just like a little bit of leverage on there, that could be pretty good. So yeah, actually I think that if this week closes, which it's looking like it will so far at least, if this closes as candle 2, I would definitely like to throw a trade on that candle 3. So next week, like I told you guys, for a move into here, and then I'm probably gonna start taking it off when I get here, because that's like a massive bearish order block over there. Let's take a look at Zcash. Okay, so we're getting a nice inversion, it looks like. Let's look at the monthly real quick. Oh my God. Yeah, so look, we got monthly accumulation, right? Candle one. Oh shit, actually that is not candle one. This is candle one. We're coming off of this monthly fair value gap. Mm, for me personally, I would like it looks like if it can, what was I was looking at? Was it the monthly? I mean, we're not gonna wait 17 days for that. I would start to assume this would be like one of the times where we'll map out candle threes open. Yeah, I mean, I would look to get long, but I would be probably just looking into here, which I think is also a pretty decent move. And we'll leave our, yeah, that's actually a very decent move. We'll leave our notes on here that way when we come back, we can we can see how everything's played out. But yeah, that's what I think on Zcash. If you're day trading, how long do you keep your trades open? What if you get caught in consolidation? So the best answer is the worst answer, which is the boring answer, right? Which is if you get into a trade and it doesn't start moving in the direction of your trade soon and you're unsure, you should always just close it. Um, that's another thing to say about like backtesting, like I love that I can backtest for a year, like I don't have to wait for candles to move, and at the end of it, it will tell me that I'm usually in losing trades for longer and my winning trades are shorter. Uh, but if you're a day trader, I would say like 1 to 3 hours, and anything below that, anything below 3 hours is reasonable. Because the New York session 9, 10, 11, 12, that's 4 hours. Then that's lunch, then all the way to 4, and then it closes the market. So yeah, if you get caught in a consolidation, probably just best to hop out because you're not trying to trade the consolidation, right? And consolidations can at least be kind of what do you call it? Like a little bit nice, we'll say, because it price doesn't usually move too much, so you get a lot of time to get out at a reasonable price without getting stopped out usually. When you say candle 2 close inside candle 1, do you include the wick or just the body? The wick for sure. Yeah, 3 hour time limit, that's reasonable. Especially if you're trading like after 9:30, like you start at 10. I know a lot of good traders that do that. Yeah, okay. Well, once again, I appreciate you guys turning out. Gonna keep doing these mini series, and yeah, if you guys have questions, if you guys want to send me examples and double check them, feel free, or even in chat. Yeah, for sure, guys. No problem. Appreciate you guys. Yeah, yeah, just send it on Discord. I'll let you know. All right then, fellas. You guys have a good night. Be safe while you're trading.